Imagine your home as a fortress of value waiting to be unlocked. If you are a homeowner, you may want to consider tapping into your home's equity, which could be your key to accessing funds without having to sell your home. Schoolsfirst Federal Credit Union joins us to explain the nuances of home equity loans and home equity lines of credit. Let's welcome Brittney Owens, Financial Education Specialist for Schoolsfirst. Great to have you back, Brittney.
Thanks for having me. I love being here.
Yeah, we always appreciate it. Okay, so Brittney, give us the 411, the basics of home equity.
Yes. So first, let's start with, what is equity?
Yes.
So equity, simply put, is the difference of the value of your home and the balance of your home. So for example, let's say we have a home, the value is $500,000, and we still owe $300,000. The value of equity we have is $200,000, and we can turn that into a loan. We can use it as a HELOC or home loan credit, and then you can use that to maybe buy, debt consolidation, tuition, or if you have a wedding, you can use those loans to help you.
Okay, so can you tell us how home equity loans differ from home equity lines of credit known as HELOCs, like you just mentioned?
Yeah, so a lot of people think they're the same thing. They're both loans of equity on your home, but they are different. So for example, the home equity loan, that's going to be used like a lump sum put directly into your account. Those loans are used for big ticketed items like debt consolidation, you're trying to get out of debt. And then there's the HELOC, known as the home equity line of credit. Think of that as a credit card. You're able to use that card when you need it. You're going to take small increments out. So, Valentine's Day is around the corner. So if you're looking to maybe get married, you're going to have to buy a dress, the venue, a DJ. You're not going to pay for all those items at one time. So you could use your HELOC to be able to take those small increments, or even to do home repairs and work on one room at a time in your home.
Okay, this I didn't know. And are these loans also considered mortgages on your home?
It's going to actually be considered a second mortgage on your home.
Okay.
A lot of financial institutions will allow you to lend up to 85% of your home equity appraisal. But, reach out to your financial institutions and make sure they're maxed out at 85. But it's actually going to be a second mortgage. So you'll still have to make your regular mortgage payment and then the home equity or the home loan credit payment.
Okay, and it's also, tax season right now. We're filing. So when filing for taxes, can homeowners deduct the interest they pay on their loans?
Yes, it is tax season. It's right now, right in there. So it depends. Everyone's situation is going to be different with their home loan.
Yeah.
So please talk to a tax professional first, but maybe there are some times you can use the interest to do deductions on your taxes. So please talk to a tax professional first.
Okay, and what pitfalls should homeowners be cautious of when venturing into unlocking their home's equity?
Yeah, so there are many pitfalls. Unfortunately, we have to know the difference between our wants versus our needs. Because a lot of times if we're getting a $200 deposit into our account, many people want to take that grand vacation, go to Hawaii, go to Europe, but that's not what the loan is going to be used for. Remember what you're using it for if you're doing loan consolidation or paying for tuition. And then with that line of credit, the HELOC, it's like a credit card. Many people start buying their everyday purchases, their toiletries, their everyday shopping things. So we're going to want to stay away from that and really just focus in on why we got the loan.
Exactly. Think ahead and making sure that you're accurately planning for everything.
Yes.
Any final tips for our audience navigating home equity loans and HELOCs?
Yes. So when it comes to the HELOC, be mindful of your monthly payments. Be on the lookout for that because they can fluctuate because it's not a closed-in loan. It's going to be variable. And then if people want more information, they can go to our Schoolsfirst website, financial education tab. There's workshops, multiple workshops and webinars and calculators that they can use to do the math for themselves, or if they need assistance, there's someone there available.
I like that you said multiple workshops, because you might not get it the first time and you want to revisit and learn as you go. So that's good to know. Brittney, always a pleasure.
Thank you. Love being here.
I like having you on. So you can visit one of the many Schoolsfirst Federal Credit Union branch locations as seen on the screen right there. And you can find out more online by going to schoolsfirstfcu.org.